Inflation affects everyone, but the way the rich approach it is vastly different from how most people do. Instead of fearing rising prices, they find ways to profit from it. In this video, we'll explore 5 key strategies that wealthy individuals use to grow their wealth during inflation. By the end of this video, you'll have a deeper understanding of how inflation can create opportunities and how you might be able to use some of these strategies to your advantage. Let's dive in. One of the primary ways the wealthy make money during inflation is through real estate investing. When inflation hits, property values generally rise and rent prices follow suit. This is where real estate becomes a powerful tool for the rich. They invest in properties not only for the appreciation in value, but also for the rental income that grows as inflation pushes rent prices higher. A key advantage here is that while property values and rental income increase, their mortgage payments remain fixed if they've taken out a loan at a low interest rate. Over time, the value of the debt decreases in real terms, meaning inflation essentially reduces the burden of their mortgage. What's more, many wealthy investors use leverage to buy multiple properties. Leverage allows them to borrow money to make their real estate investments, amplifying their gains as property prices rise. Inflation works in their favor because while asset values increase, the cost of borrowing remains relatively cheap compared to the returns they earn from their real estate investments. In other words, rich people use inflation to pay off their debts with devalued dollars while watching their real estate portfolio grow. Another way the rich profit from inflation is through investments in stocks and commodities. Certain stocks, particularly those in industries like energy, technology, and essential goods, tend to perform well during inflationary periods. These companies have what's known as pricing power, the ability to raise prices without losing customers. For example, energy companies can pass increased production costs onto consumers, allowing them to maintain or even grow their profits during inflation. Wealthy investors focus on these inflation-resistant sectors to ensure their portfolios remain strong, even when the economy faces rising prices. In addition to stocks, the wealthy often invest in commodities like gold, oil, and other precious metals, which tend to retain or increase their value during inflationary periods. These hard assets serve as a hedge against inflation, providing stability when other investment types such as bonds or cash may lose value. By diversifying their investments into commodities and stocks that thrive in inflationary environments, the rich safeguard their wealth while finding new opportunities for growth. A third strategy involves investing in inflation-protected bonds, such as Treasury inflation-protected securities TIPS. These bonds are designed to adjust with inflation, ensuring that the returns on the investment keep pace with rising prices. For the wealthy, this is a safe and stable way to protect their purchasing power during inflation. While regular bonds might lose value as inflation erodes the real return on investment, TIPS and other inflation-protected bonds increase in value as inflation rises. This makes inflation-protected bonds a key component of the rich's portfolio, particularly during periods of economic uncertainty. By including TIPS, they ensure that their investments continue to grow in real terms, even when inflation is high, providing them with both security and steady returns. Owning or investing in businesses with pricing power is another popular way the wealthy make money during inflation. Businesses that can raise prices without losing customers, think luxury goods companies, tech firms, and utility providers, are well positioned to thrive during inflation. These businesses can pass on higher production costs to their customers, maintaining or even increasing their profit margins, while others struggle to keep up with rising expenses. Wealthy individuals often invest in or own stakes in companies that have this pricing flexibility. By focusing on businesses that can adjust prices according to inflation, they ensure their investments remain profitable even as inflation erodes the value of money for others. This strategy also works for small business owners who cater to niche markets or offer essential services. Those who can control their pricing have a distinct advantage during inflation. Finally, rich people often invest in hard assets like art, collectibles, vintage cars, and rare wines, items that tend to hold or increase their value during inflation. These assets are not only valuable because they're unique or rare, but they also serve as a store of wealth in times of inflation. As currency values decline, demand for these kinds of items typically rises, making them an excellent inflation hedge. Wealthy individuals understand that holding tangible assets that have intrinsic value allows them to preserve their wealth. These assets can be sold for a significant profit as they become more desirable during inflationary periods. Whether it's a piece of fine art or a rare vintage watch, hard assets offer both financial and personal value, making them a smart addition to any high net worth individual's investment portfolio. And there you have it, 5 powerful ways the rich make money during inflation. From real estate to commodities and inflation-protected bonds, the wealthy use a range of strategies to not only protect their wealth but to grow it during inflationary times. While inflation can be a challenge for most people, for the rich, it's often an opportunity. These strategies show that with the right knowledge and approach, anyone can take steps to protect their financial future, even in times of rising prices. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more content on building wealth in navigating the world of finance. Thanks for watching, and we'll see you in the next one.